Well, that was fascinating listening to Joe's history, and I liked his characterization of how a lot of people think of the tax code today, irritating but largely fair. And I was thinking, that's kind of how my 13-year-old daughter thinks about me. I think I'd have to think. I want to be brief because there is just so much deep historical knowledge in this room, as well as the panel excluding myself, that I want to very much get to our conversation. But let me just briefly, from a fairly high altitude, talk about what's right and what's wrong with our tax system and our debate about it, picking up kind of where Joe stopped, more a contemporary analysis, although very much coming off of one of Joe's themes, which was the durability of the system, which I think is quite remarkable. So let me begin by ticking off things that I think are healthy and less healthy or sick about the current system. I'll largely focus on federal taxation, but I'll mention state and local along the way because they're important too and shouldn't be neglected. We have an enduring system, as you just heard, of revenue collection, and of course not everyone loves it, but its infrastructure is firmly in place. It's widely accepted and it's highly functional. Now, as Joe stressed, you can always find people who will disagree, but I think the system is broadly viewed as legitimate. I think you were kind of underscoring a similar point. Now, I'm going to introduce in a few minutes ways in which I believe that legitimacy is becoming more fragile in the spirit of the introduction we heard, and what we should consider doing about that. But in this regard, we are just not Greece. And the people who pull their hair out and say we're Greece are wrong. I'm sure folks in this room know the anecdote about how the tax collection is just so messed up in Greece that they couldn't figure out how you're supposed to pay a tax on your swimming pool if you have a swimming pool, and no one paid a tax on their swimming pool. The tax collectors are just extremely ineffective in that regard. So what did they do? They got out Google Maps and looked around and found all the people with swimming pools. I think when you have to resort to Google Maps, you've got a problem. So I think the infrastructure is solid in that regard. What else is healthy about our tax system? This is very important to me. It's very elastic to growth. I'm talking about federal taxes here. Revenues remain highly cyclical, and that helps us avoid structural budget deficits and provides people with more after-tax income in recession. A structural budget deficit, of course, is a budget deficit that increases when the economy is moving towards full employment. And that's the kind of budget deficit you very much want to avoid. I happen to be a big fan of cyclical budget deficits, the idea of Keynesian stimulus to offset demand contractions. That's very important, and I think it's worked well for us, and I think, in fact, its absence is one of the reasons the economy remains in such a slog today. But the progressivity of the tax system contributes to this elasticity to growth, which is essential, and it should also remind us how important growth is to revenue collection. And in fact, in my professional lifetime of studying these matters, there was really only one period where we, of course, achieved a budget surplus, and that was in the latter 1990s. And that had a little bit to do with policy changes. They weren't trivial. President Clinton did raise taxes, but it had a lot to do with growth as well. Also, there's been, sticking with healthy aspects, there's been throughout history, though much less today, and this is a big problem. Again, I'd be more interested in Joe's view on this if he wanted to say a little bit more about this later. There's been a linkage, I think, between paying taxes and building and protecting a better nation. Pay your taxes to defeat the Axis, to build the infrastructure we need to fix today, to stand up our national system of public education, and that, again, involves state-level taxation as well. I was moved by Jerry Brown in California. I'm being slightly reductionist here, but not too much, who essentially went to the electorate, because everything out there is plebiscite, but that's not the word for it, referendum. Everything's a referendum out there. So went to the electorate and says, if we want to preserve our education system, we're going to need higher taxes, and the referendum passed. Now, many of those higher taxes were on the wealthy, but there was also a sales tax increase in there as well. That kind of connection for for the tax code to the things we get from the tax code, to me is important to the legitimacy that I worry about losing. Okay, that's all the healthy stuff I can say. Let me turn to ways in which our system of taxation isn't as healthy as it needs to be, and if I have time, briefly think about how to fix it. So I think we're at serious risk of losing the connection between what the majority wants from the government, what the majority of the electorate wants from the government in terms of investments, public goods, safety nets, social insurance, national defense, and their costs. I mean, I really think that connection is seriously broken, and it's dangerous. In no small part, this harks back to the Laffer curve and what I think of as kind of the extreme version of supply-side economics. We can raise more tax revenue by cutting taxes, especially on the wealthy. Now, you know, not to be too harsh on supply side, there's a more sophisticated view that says you won't lose as much revenue as you think. But that's not really how it's discussed in the popular debate. In the you know, hyper-dynamic scoring, even what we heard in the last election is you know, we can collect more revenue by cutting more taxes. You can have your cake and eat it too. And that disconnection is fundamentally threatening the system. It also relates to me what seems to be what I would characterize as less responsible politicians and policymakers on all sides. This is bipartisan of the aisle, who are comfortable promising lots of goodies but very uncomfortable paying for them. So during the campaign, Mitt Romney attacked Obama for A, not being willing to tackle unsustainable entitlement costs, and B, for cutting Medicare. Those are inconsistent. The president, both in his inaugural address and especially in the State of the Union the other day, talked about a robust, and I personally thought a pretty enlightened agenda, but said not a peep about paying for it. President Obama has also created the illusion that we can raise the revenue we need on families strictly above, initially, $250,000, the top 2%, and now even a narrower slice. And the fiscal cliff deal made 80% of the Bush-era tax cuts permanent. I cannot overestimate, Ezra Klein has a good piece about this in the newspaper today, I cannot overestimate how much this idea has cramped our current tax debate. The idea that we can achieve the sustainable budget and the investments in public goods and social insurance and safety nets and defense that we need simply on taxing a narrow sliver at the top of the scale. I happen to believe that's the right place to start, but we can't end there. And that said, President Obama also deserves praise on this front because he did run on a tax increase, which these days is a bold thing to do, given the caveats I just said. Okay, a few other problems and then I'll stop. The system doesn't raise enough revenue. This isn't just a recessionary issue. This is policy related, having to do with cuts in tax rates, and not just on the corporate side, but on the individual side as well. It also relates to this horrific pledge that so many, particularly Republicans, have taken to never raise taxes. Now, you might say to me then, so Jared, what is enough? Well, I don't know, to be honest, but historical averages, which are about 18% of GDP in terms of revenue collection, don't help. We've got aging boomers, myself included, health cost pressures, obligations to veterans, which are more significant than they've been in the past, many of whom are going to need more help than earlier cohorts, an aging infrastructure. We have significant debt service, education needs to offset the inequality problem, the regulatory function, including climate, financial markets. These issues have large tail risks and can't be ignored. So the historical average won't work for us. We're going to have to do better than that. The system has become less progressive. Large decline in effective rates have been mostly concentrated among the wealthy. And that's partly related to policy changes, lowering the rates, but it's also related to the composition of their income. And Joe mentioned the favorable treatment of unearned income as the top 1 to 10%, more of their income is concentrated in non-labor income. Those preferential treatments become a larger part of the tax system, and I would argue a bigger problem and one that threatens the legitimacy. I'll make 2 more points and then stop. I mentioned that the systems have become less progressive. I've written, most of my career, I've written about this issue of economic inequality. I don't look to the tax code to reverse that. The growth of income inequality is very much a pre-tax story. What you don't want is the tax system to exacerbate it. It's what Alan Blinder calls unnecessary roughness. At the same time, you can't ask the tax system to offset a pre-tax phenomena year after year. I think it can help, and I think it should help, and it definitely shouldn't hurt. But if you think the tax system should offset income inequality, you are essentially asking the tax system to ratchet up its progressivity and its redistributional function year after year. And I think that's highly unrealistic. Corporate taxation is a mess. International is particularly screwed up. Maybe during comments we can say more about that. I have a section on what to do, but my time is up, so I'm going to stop. And if people want to ask about solutions, I have a long set. I mean, I have a number of bullets that we can talk about later. But I did want to raise one point and one question. I mentioned Jerry Brown earlier and just this microcosm example of his tying this to education. I wonder if part of the way forward, this reconnection of taxation to what it does for us, might work better if we actually tied tax measures directly to the benefit side, to programs, policy, services that people want. If we had a dedicated tax that pays for health reform, if we had a dedicated tax that pays for infrastructure, although you wouldn't want to call it infrastructure. I'm not the messenger. That, to my mind, is a potential way forward. I'd like to hear perhaps others comment on that. And finally, this is more of a question for Joe, I think. Are the political stars, are the dynamics any way aligned such that we could be looking at an '86 moment again, a moment of bipartisan tax reform? I don't know. What I do think is seriously problematic and needs to be addressed is this issue of legitimacy. Privileging certain types of income, capital gains, the fact that the system favors debt financing, for example. That type of privileging has legitimacy costs. They came up in this election and they were very big. This is large in the public's mind. When we privilege certain types of income that go to certain type of people, we better make sure that the benefits outweigh the costs. The benefits have to be shown in empirical analysis to really lift investment and growth. And from what I've seen, they don't. The legitimacy cost, on the other hand, is very high. That's the kind of thing I think we need to change. I'll stop there.
Thank you.